Welcome to my channel. I'm Scott. In this video, I'm going to walk you through the process of valuing Gartner stock by analyzing their financial statements and dissecting their financial ratios so we can determine if it's a buy or a sell. Let's get started with the model. This is a large cap company, 37 billion market cap. They're trading at $4.83 a share and they have 77 million shares outstanding. Gartner is a research and consulting firm. It conducts research on technology and shares its research both through private consulting, also executive programs and conferences. Let's look at their financials. The way you value a company is you estimate the free cash flows into the future and then you discount those numbers back to today's value. That's what we're doing in this video, and free cash flow is cash flow from operations minus capital expenditures. Their free cash flow seems to be going the opposite way. It was almost 1.3 billion in 21, now it's 1 billion in the trailing 12 months. Still decent margins. They convert 17% of their revenue into free cash flow. Net income is the profit or loss on the income statements, revenue minus expenses. That's pretty steady, around $800 million a year. Revenue is the sales for the company, and that goes up each year from 4.7 billion to 6.1 billion. We estimated 4 years of future free cash flows. We also estimated a terminal value of total cash flows past year 4, that's 22 billion. We discounted those numbers back to today using the weighted average cost of capital. We get a value of the company of $20 billion. We divide that by 77 million shares. We get a calculated stock price of $256. They're trading at $4.83, so they're trading at an 88% premium. It's a sell according to the model. Do you think it's a buy or sell? Let me know in the comments. There are 59 companies in the same industry as Gartner, and if they have a number in red, they're worse than the median. If they have a number in blue, they're better. They spend $100 million in CapEx, which is less than the average. They're pretty leveraged. The worst debt to equity ratio, for every dollar of equity, they have $4.50 of debt. They do not pay a dividend. They generate $1 billion of free cash flow. They rank 5th in market cap, 37 billion. Their price multiples look really weak. They're trading at 45 times earnings, 37 times free cash flow. Their revenue is 6 billion, a little more than the average. And their 5-year annual revenue growth rate is equal to the average at 8%. Here's their latest income statement. The second quarter of 24 compared to the second quarter of 23. Revenue is up a little bit from 1.5 to 1.6 billion. It's up in every category, a little bit in each category. Their 3 categories are research, conferences, and consulting. Most of their revenue is research. Their expense is 1.3 billion. SG&A is their biggest expense, 700 million. Operating income looks pretty good, 318 million, up from 280 million. They spent 20 million of interest on their debt, not as much as I thought since they're so leveraged. Net income 229 million, up from 200 million. EPS of 295, and they're buying back stock. Last year they had 79 million shares outstanding, now they have 78 million. To summarize, I have them trading at an 88% premium. I give them a ranking of 3 out of 10, but 5 out of 10 I would buy them. I like companies with high scalability, and you could really scale a research operation. It's much easier to scale that than selling a physical product. Ratios 2 out of 10, pretty weak ratios compared to the median in the industry. Financials 4 out of 10, even though their revenue is going up, their free cash flow is going down. They still generate a lot of free cash flow relative to the amount of revenue they generate. So as long as they can maintain those margins, I would consider buying it. They don't pay a dividend, they might in the future. So let me know what you think. Give the video a like, subscribe, or comment below. If you'd like to get a custom valuation or just support the channel, you can become a member by clicking on the link in the description below. Thanks for watching.